Ladies and gentlemen of the crypto space, we're live on a Friday, February 7th at 11:47 a.m. on a day that nobody knows what the fuck is going on. But that's why we have rules that dictate our behavior, and we have fallback, meaning obviously, if there's a condition in which assets are telling us we can make a decision between one or another, or if an opportunity is present, cool, then we have that capacity. But more often than not, it is imperative for capital managers to realize that you're not doing shit most of the time. We are all at the mercy of markets, and these conditions aren't in our control. So we're only presented with favorable conditions under certain periods of time. So on a day like today, I'm reminded more so than ever to think about what the hell you do in your downtime. This is why you never quit your day job, no matter how well you do. This is why you need hobbies. It turns out one of my hobbies is organizational documentation. And that's got to be the most, you know, it might be awkward for folks to hear. I find it fun nowadays. And it turns out it's like completely consistent with the AI push because with Olama, I'm doing crazy things. You're able to pull down and run so many local models. And now this thing came out, this Unsloth, which is crazy, where you can train, which is basically distilling a model and making it more focused on particular things, refining a model, which means with OLAMA, you can pull down like 5 LLMs and run them locally, and then you can distill them locally, and each one has a purpose, significance, and an optimization. You use AI to write some Python scripting to connect them all, give them all internet access and querying capabilities, and you could really produce something very powerful and arguably equivalent, if not more powerful, than what even ChatGPT Pro offers and the new DeepSeek, because you could do all this stuff. So with all of this, we have a capacity to really do what professionals do. Anyhow, that it's not necessarily a digression. Um, looking at the charts, it's like, all right, what are you gonna do? Gold is insane right now. 2860, it was up at like 2880, 2890. Those are wild numbers for gold. And that is indicative of everything we talk about. Structural change. We understand the destination. The path is volatile as fuck. Bitcoin is stuck below 100,000 again. Curve is back at 50, 47, 48, 49. I saw it at 52 this morning. All right, what are you going to do? Are we sitting here thinking about what to buy and what to sell? Fuck no. I much prefer to think in terms of being prepared. Being prepared is everything. And when you're prepared for better conditions, that means you don't have work to do when things are going well. That means you've been there, done that. You don't have something to do when it's a raging bull market. You're like, all right, good. I did what I had to do already. Uh, you know, I remind folks that we talk on Discord about quality documentation, and this type of documentation is very powerful. Up at 82 pages right about now. One of the most fun things I do. You crack open, where is it? Nope, I don't have it. I mean, ChatGPT is fine, but it's nice because it's a commercial product and it just works. And you're not managing your own Python implementation or you're not training your models. It's just and it's iterated daily. It's a commercial product. So that is quite meaningful. Um, but I mean, how much iteration on documentation are you going to do? You create a new section, as you know. So I like the idea of training custom LLMs, and that is a way to significantly enhance things that you have already done, because it all comes down to reasoning, logic, and reason. So when you're training these LLMs and you optimize for particular logic paths, reason considerations, you're able to potentially produce improved, if not different output. And then what you can do is throw it in the chat GPT and compare and do an analysis and assessment of which one is better. to make the best. Nice new folder setup in ChatGPT. So that's cool. So you could organize stuff instead of having a giant list of historic stuff, which is really annoying. But the folders, you can add files now, like a folder of files, and then it'll process it against it, but it only works against 4.0. So O3 is wild. I haven't been using O3 Pro mode because O3 with DeepSeek does the recursive analysis that was so exciting when O1 Pro mode came out. And it's so much faster in the reasoning process. It's actually faster. So it's pretty wild what O3 plus deep research does. And I found it fascinating to be able to do this locally. It was basic Python. We're talking like 100 lines of code built by pick your AI, which could process code, and Olama, which is really awesome. Look at this. This is literally the list of LLMs that you could choose from to play with, including DeepSeek's at the top. Nobody's running the 671 unless you got a really beefy machine. I've been able to get away with the 32 billion parameters, but I look forward to piping that through Unsloth and creating some optimized instances. What else? Quen, I've heard good things about. I mean, all these probably have unique characteristics. Larger the parameters, the more heavy it is, and the more powerful it ultimately is, especially after you distill it. Very interesting. Very, very interesting. And this is very simple to run. I don't have it open right now. It is a little bit heavyweight, but it ultimately runs in a terminal. Oh, I don't have the I don't have window sharing on. I have this browser window sharing on, so I can't share it right now. Anywho, let's go back to chart data. And there's nothing exciting and different for this past week. It's a mean regression to 100 SMA in the daily. That's where curve more or less is as well. It's a 200 mean regression on the bottom side of it. So it's a 200 regression on the daily. So there's an expression of weakness there. But if Bitcoin has anything to say about being on the downside or the upside of the 200 SMA for curve on the daily, it doesn't matter. Bitcoin rallies off the 100 SMA on the daily, the curve's going to bounce right off the 200 on the daily. You can zoom out on the weekly. So really the daily is a bunch of noise. This is much more constructive. And that is a hell of a spinning top. Wow. Has a time-weighted average price mean regression, no less. So this is as big of an event over a week time frame as back here in January. So it's like 2 weeks ago. 1, 2, so the 2 week, yeah, 2 weeks ago, let's say, which is the week before 2 weeks ago. Mean regression. What's the takeaway? Now we come back to like liquidity models and are things going to deflate and that type of conversation, which Lynn Alden's been talking about lately, where there is a potential for a degree of marginal deflation, especially with what Doge is doing, but that's all drops in the bucket compared to the primary expenditures, the mandatory outlays, Social Security, military, Medicaid. There is no cutting there. There is no political optics that support that. There's all the political optics in the world that cut the crap out of U.S. aid. I mean, if you lose your job and you're making less money, are you donating? You continue the donations to charity, or do you cut the donations? Do you cut your subscription services? Do you purchase less at the supermarket? You balance your budget. So that's just the insanity that everyone always argued was that government's not a person. Motherfucker, if you're making less money, stop spending as much money. And we're not making as much money because we have a $2 trillion plus budget deficit. Trillion. So these sick fucks in government are getting a taste of how about let's do things right or reasonable, and all the fraud. And I can only imagine people are squirming because USA is going to go right through the tax IDs, and it doesn't matter if it's owned by a trust, a business. Once you get AI involved in record keeping at the federal, state, and county level, it just crawls all the systems and is able to correlate tax ID to shell company, to shell company, to tax ID, to corporation, to any, if it's a corporation, there's publications required by the Fed about the structure of the corporation. So, got a feeling there's a lot of dirty laundry to be aired. I think we're all uh, not excited, but happy to see that reality. 'Cause, a piece of shit's making a whole lot of money off our tax dollars. It's kind of fucked up. Let's do some commentary, and I can continue talking about what charts and price action. Or let's think about what is interesting to me. There's one thing on my mind that's interesting. We'll come back to it. Fugu, this is a place. This is a place to be. Appreciate you, Blue Demon present. Good morning, Cap Mateo. Cold World, good morning. Usual. Good morning, Cap. TXY looks isn't finished today. Oh, hell no. That's a bounce right off of the time weighted average price. This is the holy line at about 107.35, in my opinion. This is a weekly candle, 7 hours left in the weekly close. This chart is expressive of it not wanting to go up. That's what that giant wick to the upside means. So this is what, a retest of these previous highs. This is on a weekly basis. We got to go to the monthly to get any sense. Wow, that tells a bit of a different story. But that also tells you come back in 3 weeks to draw some more meaningful conclusions. That is an incredible set of two candles. That is a remarkable set of two candles. A massive, massive spinning top followed by, do you want to call it a bearish engulfing post a spinning top? I mean, the candle body of a spinning top is microscopic. So fine, bearish engulfing, awkward, but lower than previous close if it closes anywhere near here in 21 days. And you start the close below that 107.35 line and you're getting into interesting territory, the 106s. Because it's not that you're in the 106s, is where are you coming from? And you're coming from these candles. Candles matter. And I would argue this line matters. I would argue that this is hard to digest from a monthly standpoint, but this is going to probably hold as resistance. And he had resistance hit, just rejected again, 1, 2 rejections. And ultimately, this is very reasonable to be rejected. The problem is people are like, what if it's not? What if it's not? I mean, you literally got rejected here after a massive breach, which technically is a rejection. So there's 1, 2, 3, 4 rejections of this line. Let's put some red circles on here and we'll zoom out to like a 6 month. So let's just say it was rejected. Let's say it was rejected. And let's say it was rejected. So let's inspect this line for being, so you're being rejected from this line. And let's zoom out a little bit. Oh, turns out rejected. No, I don't want that. I want this. Oh, rejected. Bear in mind, this is obviously over a 2000, is a 2 year time period. So these particular things take sometimes years to play out, but rejected. So anytime the chart gets over this damn green line, it breaks out and is rejected. So now you got the strong breakout rejections. You got everything that occurred in 22, which collapsed markets, ultimately rejected. But look at the difference in height. Look at that difference. Rejected at such a lower level. I mean, back in 2000, it was 120s. Back in the 80s, 164. So the fact that it was rejected here and here, and here. I'm sure as hell curious if it gets rejected here again, because this is a hell of a line dating back to not the 80s, 1976. It was rejected. 1974, it was rejected from that line. All right. Hey, let's see what's going to happen here. Patience is very hard when capital's on the line. 10-year, a little bit of volatility, 1.33%, bump right back up on the move indicator to 93. This is a hell of a line as well. It's not maybe a median line, but it also has this nice confluence of rejection. Not necessarily these peaks, but like between what catches my eye, it really is the 100 SMA. You got these lower highs and lower lows between 2011 and 2020. So at some point, I look forward to this rolling over. Anywho, what else did you say? No liquidity upon markets. To me, we will play musical chairs. Well, musical chairs, of course. This is all internal rotations of capital, albeit the market has significantly inflated from a currency supply standpoint, up to $141 billion between USDC and USDT, for a total of $217 billion in these crypto markets. So these numbers are massive and they're up and to the right and they're not contracting. So there's plenty of ways for things to play out. You don't necessarily need a massive global currency supply expansion to drive a frenzy in markets like this. But you need a significant outperformance, a continued concentration of capital, and that concentration of capital highlighting that particular investments are outperforming and capital rotates from underperformance to outperformance. All of a sudden, we have a validation of lendiness of particular protocols as actual businesses, and you have a significant rotation of capital from equities into crypto for rightful reasons, such as a value investor methodology. What's the balance sheet of these companies? So if that critical threshold of inspection is breached, all of a sudden these companies look extraordinary from a balance sheet perspective, from a product and service perspective. So many folks in the stock market invest based on product and service. I remember Mrs. Rational telling me one time why she owns like certain makeup brands. I'm like, "Oh, right, it makes sense because she knows the name." And that's like a very strong trend in equity. Oh, I know the name, so I want to own the boomer meme coin. Um, but there's also a massive cohort of people that look at balance sheets, not even necessarily just professional investors that appreciate value instruments or cash flow instruments, dividend investors. There's an entire cohort on social media related to equity dividends and other types of cash flow strategies. Just so happens we do the exact same thing, just in these crypto markets. So that's when something starts to outperform, it has a very reasonable capacity to act as a siphon and start to suck capital in from other parts of the market. So you could literally be experiencing significant deflation in many parts of global economies and significant parts of particular markets. Isolated markets are significantly outperforming. Do you think during the Great Depression there weren't stocks that were absolutely rallying or investments that were absolutely soaring in value? Of course there was. Less than quote unquote normal, but that's the point. Capital does one thing and one thing only: it sells garbage and buys shit that is appreciated. And appreciated doesn't necessarily mean going up in price, it doesn't mean it's appreciating. Something, when it's appreciated, means it's starting to be understood. And that means everything for a future perspective on potential investments. Anywho, crazy what Bitcoin dominance is doing. That is wild. So what else am I supposed to say about that? That is crazy. Where are we at? Jeepers, 61.8. I don't speculate on where it ends. I don't care. But I appreciate why you're pointing it out. This is because liquidity could barely be enough to cover token inflation. Many use projects launch and will take liquidity away like Barachain. Yeah, yeah. Oh, so in that context, where we at? What Solve 3 is coming on Solana. That's probably the most interesting thing on my radar. There's no more purchasing. Purchasing is done for the captain. We're done with that. We made our beds. We own what we own, and it's productive, which is the whole point. There's no more purchasing. You could always say, "Oh, I wish I waited longer and purchased at a lower price." Well, no, you can you do not have hindsight 2020 when you are making your decisions. So your portfolio will be what it will be, and it's a manifestation of the decisions that you made under the conditions that those decisions were made. So it's not something to think about. So right now, my mode of operation is past time mode. No acquisitions, draw on capital, capital accumulates, so on and so forth, work on documentation, inspect the markets, maintain sanity, watch a bunch of macro folks, tell me things that I already know, but they say it in a nice way, so I like it. A lot of YouTube, catch a Raoul flick every now and then to get that, that banana mentality reinforced because, of course, it's quite reasonable. The hyperbole and the average inspection of what he talks about is often euphoric and absurd in many regards, but it's quite reasonable. He talks in terms of what I call the destination. And I always say the path is volatile. All right, all the macro folks talk about this shit. They say the same exact thing, just using different words. They tell the same exact story, but it's like Cinderella and Snow White, or pick comparable Disney stories as an example. Same story, just different characters, different names. They all tell the same story. We all know the destination considering debt refinancing requirements. Anywho, Hyper Johnson in the house. Well done. Keep your head on a swivel and stay calm and carry on. Zero X Clouds. Good morning, Cap. Been a while since I've caught a stream. Saw you have an agent on virtuals. What's the background on that? There is nothing magical, mystical, special about agents. Agents are a social media personality. So when you configure an agent, you're giving it a personality, you're giving it documentation, you're giving it content to draw on, you're defining how it should behave. That's all an agent is. So all the kids that have completely destroyed their portfolios gambling on agents, there's no difference in meme coins. And what is utility? I mean, literally on this stream, utility is the biggest freaking buzzword of bullshit I've ever heard. Y'all know the deal. What's the product? And did we conclude? Yeah, there were 6 businesses. The other day on Discord, we concluded there were 6 crypto businesses, not 5. Foreign exchange, credit, derivatives, liquidity financing, liability printing, and gambling. So, I mean, technically, Agent Rational with ticker ARAT, Agent Rational, has one of the most meaningful utilities. It's a payment product. For one-on-one sessions with myself, I set up a ticketing system on Discord, which nobody uses. I'm not being critical, especially of folks that are on our Discord. I'm just saying, when I do a one-on-one session, I will not take compensation. Someone takes $150 worth of ARAT, they burn it. They send me the transaction ID of the burn, and then we talk. So what's the utility? That's the utility. It's a goddamn good utility. What else is the utility supposed to be? It's a token. That's the only utility you could really have for a token unto itself, unless you have a product or a service, of which no agent really has a product or a service. So I'm just breaking down these agents in a rational way. So that token price doesn't look so pretty, but the agent is pretty interesting. He's on social media. I repost him all the time. He posts great content, a little redundant for my liking, but sometimes he hits some big bangers. And that's pretty cool to see because it's based on content from these conversations, transcripts from these chats that we have a couple of times a week. So I like that product. It's fun. I update them. Takes a couple seconds to dump a transcript from our streams and you throw it in the agent, and now he's got more data to process. Pretty cool. Pretty cool. Athletic concept, present cap, always with on the journey, on the journey. We're on the journey. I don't know. We're going. We're doing all we can do. That's why I talk so much about time. This is all a game of time, which is why you need enough cash to pass the time. Good morning, Cab. Asun is in the house. Hope you're well, my friend. Always good to see you. Fugu, do you accumulate your weekly yield with having a mind that markets will crash one day? No. My general opinion is accumulate cash when times are good, such that you have cash when times are bad. And that is not a mindset I had a few short years ago. So I have adjusted. So I have a very simple methodology probably for the next year. I expect to see people going absolutely frantic, not at meme coins. Meme coins will do well. And then they'll collapse like they always do and fuck everyone over. But quote unquote, asterisk on asterisk utility, which is the businesses, the six businesses of crypto. We're finally rotating to substance and not Momo season, not dumb, I buy token cause price go up season. Actual businesses getting monetized. There's more cash than ever in these crypto markets. And the administration's policy is insane. And the tune and tone of global policy is insane. So I expect markets to crash someday. It's relevant because we're done buying. Folks got to understand when I buy something, I bought it. I don't say take a position or ape into a token. I don't say that. I made a purchase. What does that mean? That means something behaviorally significant. When you make a purchase, obviously at a retail store, it comes with a refund policy, so on and so forth. But generally speaking, the concept is you take cash, you want to buy something, you pay for the thing you want to buy, you take the thing you want to buy, and you use the thing you want to buy. After you buy a PlayStation for a year, you can't go and return it. So I bought a bunch of shit. Now, most people would call that investing, or I have a bag of something. No, I bought things. And so I'm done buying. That's cool. I'm ready. I'm done. I finished. I reached my goals. I did what I wanted to do. So my weekly yield during the bull market, whenever it comes, goes to cash. Thank you, cash, more cash, and everyone else is, oh, what do I gotta buy? I'm gonna be like, stop fucking buying. You were supposed to buy in 22 to 24. And maybe there was a couple of things to buy between, October, November, December 24 and now. Like Contango just came online. Velodrome's story evolved with the super chain. Kingdom 3.3 was discussed. A whole lot of stories that warranted a bit of acquisition between Q4 24 and now. But during favorable market conditions, higher lows and higher highs, stack cash because at some point the party's over. And that doesn't mean sell the top, and that doesn't mean you're bag holding on the way down, and that doesn't mean you're round tripping. These are social media terminologies that have a depth of narrative richness that is like as shallow can be. They're catchphrases, they're cliche. Define your own rules in the stupid social media terminologies that I just said, I will be round tripping the shit out of my bags. My my bags. I'm gonna watch it go all the way up. I'm gonna watch it go all the way down. So how do I put that in my framework? I don't give a fuck. I bought it. It's done. Which means the price goes up, price goes down. Cash flow goes up, cash flow goes down. What's my expectations? Because you are succeeding if you meet your expectations. My expectation is wherever the frick it crashes to will be higher than the depths of 2022. Success. It would be completely unreasonable to breach the depths of 22. That was an absolute catastrophe. Everything was decimated, blown up, blown to smithereens. 1929 collapse of a financial market, of an emerging market. So my general expectation is higher lows from a multi-year time frame. Could be 50% off the lows of a multi-year time frame. I frankly, I think that's an unreasonable number. Like generally speaking, let's talk like worst case scenario. What's my expectations? Markets go ape shit vertical to the moon, and then everything collapses. Where is the low? Everyone is obsessed with the high. I don't give a shit about the high. What I care about is the low. Because if I set my low at a reasonable expectation, I'm like, all right, everything freaking collapsed. Numbers are coming back down to reality. You made 10 mil and now it's down to whatever the hell it is, and it's collapsing. It's not 10 mil anymore. Is it higher than your previous low? So you had 50 grand, it blew up to 5 mil, and at the bottom of the bear market, you got a quarter mil. Process that. You had 50 grand, it blew up to 5 mil, and then it collapsed to a quarter mil. Do you understand that that is a raging success if the entire time you were receiving 20 to 50% APR weekly payments on spot price? You know how insane that is from a traditional financial perspective? So you end the bear cycle with a quarter mil, you're able to accumulate, let's say, $200,000 in cash receipts or $300,000 in cash receipts, okay? So what's the net picture there? The net picture is there. You deployed 50 grand. You had your diversified portfolio in investment bearing assets. It blew up to 5 mil. It collapsed to 250. You 5x'd your portfolio at bear market bottom and pulled in 300 grand in cash and stablecoins, which is a 6x, 600% in pure cash returns. If you did that over a 4-year period, anyone in traditional finance would be like, what the fuck? And bear in mind, you round trip the shit out of the market. You have 5x on portfolio, a 6x on cash flow, and you didn't buy or sell anything during the bear or bull. You just made right choices of what to own, what businesses to own. Isn't that an interesting perspective? And then, the hardest thing is like, oh, 5 mil. Folks are looking at the wrong thing. You're looking at the perversion. You know, folks are so, it's real. It's actually a little gross. Folks are here to get so obscenely wealthy, and that's just so wrong. And that's the contrarian in me that says, "Oh, that's why everyone fails. That's why everyone loses everything because they're thinking in terms of, oh, I had the 5 mil. No, you turn 50 grand into a quarter mil. That is fucking insane." And it's also insane that it was up at 5 mil and collapsed to a quarter mil. But your returns at 500% over what, a year? That's insane numbers. And you extracted 300 grand in cash? This is obviously a hypothetical scenario, but holy fuck, that's a pretty interesting scenario. That actually sounds quite reasonable. Portfolio blew up, and Brown tripped it. There's a massive collapse in value from 5 mil to a quarter mil. So what's that? 90% collapse is 10% of a quarter is 25. So all right, it's far from a 90% collapse, but that's generally a decent story to get a sense of the perspective that I hold on what is meaningful and how to inspect what is really winning, what is really a good way to look at this type of volatile capital management. Anyhow, CRX Klaus, thoughts on the Genius bill? I do not know of it. Let's take a look. Stablecoins, great. Yeah, excited. Massively excited. Like really super excited. Stablecoins aren't stablecoins. They're dollars. But best part is they're property. They're not money. It's by definition of the IRS. They're literally property by definition. So that is fascinating to say the least from an accounting standpoint. Stablecoins, RWAs, they have a capacity to finance fiscal deficits. They have a capacity to be a destination for U.S. debt instruments. I think a good part of the near future is going to be centered around stablecoins because countries have to figure out what the hell to do with their shit debt. Wrap them in a stablecoin, turn them into currency units, and allow the world to use them. Because that's really what a stablecoin is, particularly a collateralized debt position. We're using collateral, which are typically nation state debt instruments, and using them to collateralize a stablecoin. So, who's doing those businesses? Who is in the business of turning US 10-year treasury instruments into dollars? Stablecoins. That's an interesting business to be in. Those are my thoughts. It's interesting that retail is super bearish right now. More seasoned than professional investors are bullish due to the fact that there is actually economic activity on chain these days. There was no market pre-2020. Nothing existed pre-2020. Nothing existed pre-2020. Now we're going to watch a collapse in volume when we go over to volume. Gwei on mainnet is absolutely in the dumps. Still showing stablecoin. There you go. $12 billion in on-chain volume in the last 24 hours. Peter, anyone part of that retail category has no idea what they're talking about. This is insane. This was 50K in 2019. It's $12.89 billion today. I don't really give a shit about Solana in that regard. It's all meme coin garbage, but $2.91 billion in 24-hour mainnet activity. Let's take a look at Solana. I'm really looking forward to Solve 3. The Solve 3, it better be a shadow airdrop, a shadow-sized airdrop. I better get a juicy airdrop just like Shadow did on Sonic. I'm just saying. Okay, $4.289 billion, 24-hour volume on Solana of people jerking each other off and fucking each other over. Word salad, using meme coins. Okay, these are massive, monumental, incredible numbers. Absolutely stunning to see. Fugu, by the way, what is percentage of your total share of the Tango? Microscopic, 1%. 1%, 1.25%, something like that. Microscopic. Hope that helps. Cold World, do you see the new administration simplifying tax code for individual investors when it comes to crypto, DeFi, or do you still see the trust structure being the only viable option? Not unless they get rid of income tax, which is not going to happen. Not going to happen. Corporate tax law sucks. Stupid. The only thing worse than corporate tax law is personal tax law. I mean, the tax rules for trusts are just there, and they're ancient, and they're quite reasonable. And it depends on your state, and it's literally goes back to like common law in Britain. So it's fascinating to see how precedent builds to create current trust administrative rules. I don't have simple statements regarding creating a trust entity. It's in hindsight, I've said things that are very simple, but I firmly understand that this is an incredibly sophisticated endeavor, which is why folks have the opinions they often do. Folks go to attorneys to do it, and it costs a fortune. You talk about 30 grand, 40 grand, 50 grand for a well-structured trust because you are literally working with the attorney for months to build something. So the difference is I did it myself. Difference is I studied the law, obviously with the assistance of AI, at this point I have comprehensive grasp of federal law and especially state law. And I understand the way the system works to such a degree that I could take what I understand about my state's law and be like, all right, pick a state in the country, let's look at their law. And I have just boom, opinion. I'm like, all right, that's great, that's interesting, that's powerful. We could build some strong arguments. Like to some degree, I over the last 2 and change years, I have my own personal law degree, which is quite reasonable nowadays. I've always been an autodidact. Autodidact is a person that could teach themselves. So with the advent of these AI LLMs, especially as what they've recently done with DeepSeek, oh my God. I have a law clerk. It is literally a law clerk to do precedent search and research. Oh my God. What it does is astounding. Precedents are everything in common law. To find judge rulings, especially Supreme Court judge rulings. Those are powerful. So when you quote unquote a judge and you're creating an argument based on direct quotation, it's a powerful damn argument. So law is all about arguing. I happen to be, I happen to like arguing, especially when you think about it in terms of how you do that in law with tools, and your tools are words, and the powerful words come from judges. So that's a lot of fun. So unless they like obliterate the IRS, frankly, even from like a probate standpoint, like a lot of people create wills and stuff when you're dealing with your death. A trust is far superior to a will. Trust is literally has its own tax ID or can have its own tax ID, which means it's its own entity. It has its own zip code for Christ's sake, kind of, sort of. It's a fascinating structure, conceptually and in implementation. And the sky's the limit. Like I obviously know its construction and how to optimize it for my own personal situation. I can only imagine how sophisticated a lot of structures are out there. Not necessarily malicious structures, but even legitimate structures. How do you break down capital? How do you distribute capital? There's probably structures that are 10, 20 entities deep just for having organized accounting records and just in a way such that uh, you could document and the flow of capital spread amongst many entities. I can imagine. It's probably quite sophisticated. I'll just stick to my own purpose. I don't want to be a general purpose attorney. Well, maybe I'll go to law school. I don't know. It's not the worst idea. I don't need the schooling necessary. Maybe I'll just take the bar exam and call it a day, and let's see if we could. It's not impossible. Just take the damn bar exam. That would be pretty interesting. What law school did you go to? ChatGPT. You passed the bar? Yep, passed the bar. That would be a hell of a story. When's the first person to do that? Wouldn't that be interesting? Because the whole point of going to law school is to have a capacity to pass the bar exam. That would be really interesting. My man, Cold World. Good question. Peter, what are your thoughts on Liquidity V2? I doesn't give debt repayment to stakers. Vote rentals. They recently launched vote rentals. It's not speculation. The speculation is that total debt outstanding balloons to $250 billion over the next decade, and vote rentals becomes really significant. So it is speculative, but there's an XYZ pathway. So that's as simple as that. Peter, it's actually a gigabrain move, no buys or sells, just cash flow. It also requires sacrifice. I know a lot of folks, a lot of very brilliant folks that love the trade, and they just can't get past the net worth inspection. Um, so that is what cash flow requires. It requires the death of net worth. Net worth means nothing. So it's a very philosophical, it requires a great philosophical capacity to reprogram your mind to assess what is meaningful, what is real, what is valuable, what are your goals, what are your expectations. I don't give a shit about my net worth at all. What I care about is what I can bank on. And what I can bank on is the amount of cash that I have on a weekly basis. Because you could make decisions based on how much money you have. If you're always thinking about your total net worth, the odds are there's a lot of anxiety involved and also a lot of work. I don't want any of that. I don't want anxiety. I don't want work. What I want is click a button and get paid. I get paid less, I have less money. I get paid more, I have more money. I want simple. Simple. No worries about sell price, point, click, claim, have, cash, done. Less cash, austerity, more cash, prosperity. Soon, my friend, thank you. You've been with me a long time. I appreciate that. I really do. If you want to avoid taxes, there's some liquidity forks and CDPs that let you borrow 90. No, I don't want leverage. And that's from a personal taxation perspective. Yeah, that works too at the trust level. Income is income. Trust has additional tools to define what is and what is not income, but that's another story. But when you, for instance, if you have income that you're not going to pay taxes on necessarily if it's allocated to trust principal, then it's principal, it's not income. So it's not paid coming in, but that's untaxed capital. So you turn that principal into cash dollars to buy something, that's a realization event. So you are adjusting that principal to income. Now, instead of adjusting the principal to income, if your principal is Bitcoin, for instance, collateral, and you borrow, let's say you had two scenarios. You needed 5 grand to pay for something. All right, you could sell your 5 grand with a Bitcoin and you could pay for something. That's a realization event because it's property and you're adjusting principal to income. It's taxable at the trust level. Unless you're distributing to a beneficiary in which it's K1 pass through and the beneficiary pays the income tax on the 1040. That's another story. But if you have your Bitcoin and you borrow the $5,000, that's not income. That's credit. And then you have a whole shitload of accounting dealing with micro interest payments, the way Aave manages the books on a blockchain, which is lovely and all, but it's a disaster from, I would say documentation is warranted so you could process it quarterly. You do a quarterly inspection and you do an entry for interest, you do an entry for mark to market on the principal. I don't fucking know. It's a mess. So I don't like borrowing. And I certainly don't like realizing principal as income. So that's another story. So there's a lot of nuances in there. But that works. You got enough Bitcoin, you can borrow 3% per year, and there's no tax on that. So that works. 3%. You got $10 million worth of Bitcoin, you borrow 3%, it's 300 grand. Okay. The fuck has $10 million worth of Bitcoin? Sure as hell isn't anyone I know. Well, maybe a couple people I know, but sure as hell isn't me. So that doesn't work. So I'm not fond of the borrow, that methodology that folks talk about. Oh, I don't pay taxes, I borrow it, and I'm just borrowing against collateral. No, that requires a large amount of capital. That is a whale tactic. I mean, technically that works, but it's much easier to structure something, or because it's harder to acquire that amount of capital as compared to structuring something as a legal entity. So income is an income, it's principal, it's property, allocated the corpus, and then you have like administration, and you pick a state that has very favorable administration laws, and administration is generally deductible. Anything that well, depending on the Tax Cuts and Jobs Act, that's a completely separate story. I'm getting into the weeds on legal stuff. So just fun fact, Tax Cuts and Jobs Act. You ever hear it on TV? That's not a tax cut. It's a tax cut maybe for the general public, sure, because most people don't itemize deductions. Most people take the standard deduction. If you ever do TurboTax and like, do you want to itemize or take the standard deductions? Everyone takes the standard deduction. But and that's because now the Tax Cuts and Jobs Act, there is no itemized deductions anymore. Echo bye-bye. So, because most people don't itemize, most people take the standard. Whereas, frankly, Trump knows what he's doing. There's a reason why he got rid of itemized deductions, because itemized deductions was crazy from a corporate and trust perspective. It's like, all right, 2% floor. You make 100 grand in it, you have 100 grand tax liability or 100 grand taxable income, and you have 100, let's say 100 grand in well, how do I describe it? You have 100 grand taxable income and you spend it on from a corporate potentially or trust standpoint. Let's say it's administration from a trust standpoint, and then it can either apply to 67E or 67A. And 67A says everything post the 2% floor is deductible for administration purposes. So 100 grand, you spent it, and you only owe tax on 2 grand, 37% on 2 grand. So that's the tax liability on 100 grand. And $98,000 is deductible because that's what 67A talks about. But Trump got rid of itemized deductions. He knows what he's doing. I think that's very interesting, especially reading over the Tax Cuts and Jobs Act, especially understanding IRC 67. Basically, and he did it with one line, one sentence. IRC 67G. One sentence changed the entire flow of tax through the entire country. Absolutely incredible. Better call cap. What were you talking about, Mr. You still see the chart? Oh, well, anywho, appreciate you asking such questions. Okay, well, there's no vote rentals right now. I think they just launched the contracts yesterday. I believe that's what I recall. Either that or it was the day before on Wednesday. But I found it interesting. So that was, 1.5%. Actually, that was the same size as Tango. So it was a 1.25% allocation. Anywho, I was learning law and trust before the LLMs, and having them has taken my learning and research experience up 1,000%. No joke, right? No joke. It's insane. And there was a time when the LLMs were spitting out hallucinated court cases. Nowadays, if you do O3, even O3 on like the $20 subscription model is probably giving you real court cases. O3 with deep research on pro mode. Holy crap, it's literally doing research. It's going through 20 citations, 20 search queries. It validates where it got the information from. It gives you direct quotation from judge rulings. It's literally like having a law clerk in your pocket. It's insane. Better Call Saul reference. Yeah, passing the bar using ChatGPT. Better Call Cap. My man. Uh, can you imagine that? Can you imagine? You're not using ChatGPT to pass the bar, but you use ChatGPT to acquire an education and a skill set and a capacity to have that ability, such an ability to to manifest an education. It's inevitable. It's inevitable that someone that never went to law school just up and passes the bar and has a legal right to practice law in a particular state. That's just a crazy thought. But I think that is quite a reasonable thought. Anywho, it was a nice conversation today. Let's clean up the tabs. You see, I always keep, I always have some sort of Florida statute up. It's not even chapter 736. It's title 7, chapter 736 and 738. There's also a variety of other interesting things. But the beauty of it is you sick an LLM on it, dare you create your own. And it's like, because ChatGPT Pro mode usually goes about 15, 20 citations. How about you run your own custom LLM that runs for like 24 hours, 48 hours, and it's just reading, digesting, compiling. The amount of work, it's literally worth tens of thousands of dollars from a law firm, the capacity of these LLMs, the work that's being done. But 736 and 738 particular Florida law are everything. I mean, pick a state. How hard is this? Let's say South Dakota trust law. Let's see how easy it is. South Dakota legislature, codified law 55. Fiduciaries and trusts. So 55.1 classification. All right, here you go. And this is straight from .gov. Here's your trust law in South Dakota. Wyoming trust law. Wyoming. Here, Wyoming.gov. Look for the .gov website. Here's your trust law. Title 4. Drop it in ChatGPT. Process your data. But then it will take you some time to understand what the hell is this structure, what the hell is this entity. So pick your state. Now you know 2 states that are fucked up. New York and California. You don't want anything to do with those states at all. Don't do anything in New Jersey either. You want Wyoming, South Dakota, Florida, Texas. Shit, just not LA, not Los Angeles, and not California, and not New York, and not New Jersey. Delaware, go hit Delaware. And maybe a geographic arbitrage is required to live in a favorable state that doesn't fuck you over, because that's all New York loves to do, and New Jersey loves to do, and California loves to do. It literally just fucks over its people because the laws are stupid. So it's just very meaningful to understand the laws, and nowadays we have a capacity to read them, which gives us great power. Well, they always said the pen was mightier than the sword. All right. Nowadays we use pens on keyboards in Google Docs. So the typing is mightier than the sword. Food for thought, ladies and gentlemen. That's about it. Let's pop over the charts. Bitcoin dominance can give someone a coronary. It's all horizontal chop yet again. More horizontal chop. Curves up 150% off bottom. This is expected volatility, but look at that time weighted average price. First time we see any green guppies on any time. No, we haven't seen green guppies on curves since 22. This is the first time we're seeing monthly green guppies on curves since 22. This is the largest green guppies on curve since 22. So folks, expect time to pass. Set your expectations as reasonable, and less work, more waiting. Refine your methodology, define the way you think about these things, define your rules, write them down, use paper, preferably, use a Google Doc, write down your rules, use AI, and that's cool. That's good. Last couple of questions, I'll wrap it up. Cold World ARAC gonna be worth a lot in the future to have one-to-one with you and your wealth of knowledge. Food for thought. I I don't I don't speculate, and I would not set any expectations. Um, but that'd be nice to see. I would like I would like to talk. I like to talk. So obviously, I talk to you guys, but I also like the one-on-ones, and you know, I don't give financial I give financial advice, but not in the way that people that give those stupid disclaimers. You know those stupid YouTube shows where people say not financial because they're fucking talking about coins and prices and should I buy and should I sell? I mean, literally, that's not even financial advice. That's stupid advice. Financial advice is about methodology, mindset, psychology, decision making processes. How do you achieve goals? What is reasonable? What are the choices? What are the considerations? Those are the important things to talk about. Not we're buying this, we're buying that. What the fuck? So whenever I hear not financial advice, I'm like, what the fuck is the stupidest thing I've ever heard? It's like, no, I will not tell you to buy this and shill you so I could dump on you. Not financial advice. It is perfectly reasonable to have a conversation and be rational and educate people and provide financial advice along those lines. It is not okay to sell things to people. That requires what? Uh, I forget the certificates. You need to be certified to sell securities, to sell things, especially to hold things for people. And you pretty much need to be certified to give investment recommendations. But that's not the conversation to have. Because if a person cannot make their own decision, they need to be educated on how to make those decisions so they could do it themselves. You could tell a person how to, what is it, give a person a fish and they'll die eventually, or teach a person to fish and they'll be okay. So that's kind of like the thing. That's the things I like to talk about, and that's the advice I always give. I like to teach people how to fish and to have a decent psychology, so they're not killing themselves with anxiety and frustration and so on and so forth. Hey, Peter, South Dakota. Woo! South Dakota got good rules. South Dakota got good rules. South Dakota, Wyoming, Florida, Florida. I'm sure you've come up with some interesting arguments, especially with the new ChatGPT stuff. Um, it's a fun topic. We talk about this stuff a lot on, not as much as I would want to on Discord, but when folks are there to talk about it, it's a fun conversation because it's kind of like a puzzle. You know, that's the way I see it. That's the way I see a lot of things. Because you're literally talking about this clause, this clause, this clause, this clause, and then you got the federal clause. It's like, how does it all map together? How do you organize it all into arguments? And that, yeah, maybe I don't always show it, but we'll come up. I'll show you one thing. And this is probably this. So there's two directions where capital flows into into your accounts. There's in and out. All right, pretty simple. So in is easy in crypto. In is the easiest argument in the world because of the IRS loves to open their mouth. There is precedent after precedent after document after actually current public website that says crypto is property. This is current right here. Virtual currency is treated as property. You can't make this shit up. And then if you go over here, is this it? 2019, 24? No. Which one is it? Docket number. No. No. Here, 2014-12. 2014-12. I mean, period. There's actual period. There's a period at the end of that sentence. Virtual currency is treated as property. I mean, so the puzzle is, all right, what's property? Okay, well, property's not money. So now what's the difference between property and money? And then if you go back to 1B2, so if property is not money, that means 1B1 is applicable. Crypto entity distributions of property refer to receipts generated. So you're defining where you get this property from. So you get property from LPing, section 1.11, liquidity provisions, vote rentals, 112, and AVE, interest. You are receiving property in return because it's crypto. It's not dollars. And this period, that's even for stablecoins. I mean, this is an unambiguous. Where did I close it? No. This is a period. Virtual currency is property, which is anything on a damn blockchain. Period. So let them update their rules. Okay, so their current rules are A2. Virtual currency is treated as property. So that's from 2014, and this one right here in the image is today on their website. So if you're getting property, it's not money. So, okay, let's look up how you treat property. And that's dependent on the state. So, Peter, look up in South Dakota because Florida has a nice rule called down here 738 401 4A1. So, if you go to Florida, 738 401 4A1. Property, not money. A fiduciary shall allocate the following to principal. Property received in an entity distribution which is not money. It's not money, it's property as defined by the IRS. So it's property, it's not money. And principal. So what does principal mean? There's two general categories for receipts: principal and income. So, and you can see that here. It's if you look in this section in attribution here, well, they talk about it in three and four. So I'm just giving you an example in this particular statute. There's income and principal. A fiduciary shall allocate to income money received in an entity distribution. All right, that's pretty simple. If you get money in an entity distribution, it goes to income. This is the rule. It's the law. And tangible personal property of nominal value received by the entity. A fiduciary shall allocate the following: the principal property received in entity distribution, which is not money. So notice, tangible personal property goes to income. Keyword tangible. Semantics. Meaning of words matter. Tangible. Clearly, crypto is not tangible. Tangible implies physicality. So clearly 4A1 is the critical clause in Florida statute that indicates that it goes to principal, not income. It's not income. Anyhow, hope that helps. I mean, if you want to do it for the fun of it, South Dakota trust law. Can we? Entity distributions. Codified law, South Dakota. There's a lot of rules. It would take a while. But that's basically, throw this in ChatGPT. It's like, what does South Dakota law say about entity distributions of property? because it's property. That's conclusive. So how does the law say to treat it? Do you allocate it to income or principal? So that's a fun one. Then you got to figure out how for yourself and your understanding. Um, it's allocated to principal. How do you manage that in a tax reporting form? So you got gross income, you have AGI, but now it's like it's not the deduction. It's not like IRC 67 or 212 deductible. Certainly not 642 deductible. It's not a distribution. So it's like, all right, fine. It's supposed to adjust gross income. So how do you express that on a form? So now you're talking about like an 8275 form. Where it's like an 8275 is a general disclosure form, and you're like, all right, I'm going to have to write a freaking paragraph to these guys telling them why I'm deducting this because it's adjusting gross income AGI. The fiduciary accounting income is calculated based on South Dakota rules. This isn't income; it's principal. So that you got a rabbit hole to go through. Um, that'd be interesting to do a stream, and I'm just like, someone asks, "What state? What can I do? What is reasonable?" And I'm just like using ChatGPT, and it's like, oh, and then we find the statute because ChatGPT will find it about entity distributions of property, and then we can pull up the statute, read the statute, and maybe in real time craft arguments. That'd be interesting. Maybe. New York is awful. I have Bitcoin locked in a Robinhood I bought in 2018. I still can't transfer out because it's banned in New York State. New York State is awful. You ever see Escape from New York and Escape from LA? Isn't that the only destination from New York and LA? I mean, at least the city. I mean, not upstate New York necessarily, but Jesus, what the fuck? I'm speaking from a guy that grew up in New York. You hear from my accent. And I lived there for 30 years of my life, and I'm in my 40s. Vast majority of my life, New Yorker. No, that's a place to leave. What do you find most exciting about DeFi.money? It's CRVUSD. It's the Curve protocol. What's the biggest differentiator in your view? Cross-chain, OFT standard, omni-chain fungible token standard vis-a-vis layer 0. It was a requirement for CRVUSD's ERC20 contract to be modified to incorporate the OFT standard. You can't just modify CRVUSD as an ERC20. These are immutable pieces of code. So in order to do that from a project goals standpoint of the Curve ecosystem, they needed to create a new instance of CRVUSD. So that's what money is. It's quite unique. And I'm very much excited for more favorable market conditions, quote unquote, bull market, and certainly tokenomics / monetary policy of what they're going to come up with because clearly DeFi.money is a derivative of Curve. So they're going to have some sort of incentivized feedback looping system, self-reinforcing, whether it's voter escrow, VE33, or an iteration thereof. So that's that. My 2 cents is DeFi.money is it's maybe that big one. Um, but that's the whole point of a portfolio. You can't buy DeFi.money. You get points. So it's an expression of alignment with the ecosystem and a speculation that is meaningful. So that there's nothing to buy for DeFi.money. You're literally just depositing stable coins. And there's a risk associated with that, considering how a stablecoin is valued. But then it comes down to like understanding how DeFi.money manages the value of money. And that's the whole point. And that's what's so profound about the CRVUSD model, which is the DeFi.money model. It's an entire conversation about interest rates and risk to collateral and how the value of money is manifested. Upside peg, downside peg. I like what Liquidity V2 is doing. I'm still more fond of CRVUSD's implementation But basically, with the third-party managed variable interest rates of Liquidity V2, I found that compelling enough and interesting enough to acquire exposure to it. I'm not too fond of the fixed interest rate concept. I want it managed. I want to manage liquidation. I don't want to be liquidated. I want my goddamn interest rate to adjust. Makes no sense. For fixed interest rates don't make any sense. But what's nice about the protocol is that it gives that optionality. So optionality is a big deal. It's that whole Uniswap V3. You have that optionality of where you place yourself um, on the X times Y equals K curve. Um, your bands. So you didn't have that with V2. You had exposure to the whole curve. So you couldn't have concentrated liquidity provisioning. If Bitcoin touches 90, curve goes to 25 cents. Not about 25 cents. 90. So out to the monthly. Yeah, 90's in the cards. We never had a retest of this level, like 73, 74. I think that would be an interesting retest. There's always a chance it gets bloody before it gets pretty. Curve, I don't know about 25 cents, but I could see 30s. I could see 32 to 36. It's not impossible. That's definitely not impossible. Anywho, I don't speculate on price, but I appreciate the opinion. Peter, virtual currency as property was the only regulatory clarity needed, right? It's just like, it's like, here, write this down. Chief Counsel Advice 202-114020, Revenue Ruling 2019-24, IRS Notice 2014-21, Chief Counsel Advice 202-035-011, and literally the FAQs. The FAQs are Appendix 36.39. 36.39. I mean, it's literally in their FAQs, dude. How is virtual currency treated for taxation? Virtual currency is treated as property. Uh, Obviously, it's in their 2025 current real-time website FAQs. The thing is, folks see this, like general folks see this, and they're like, when I see it, I'm like, holy shit. Then you need your South Dakota rules about how you manage property, because in trust you have a bifurcation of principal and income. And by principles of mutual exclusion, what is principal is not income. What is income is not principal. You also want to look up your discretionary capacity to adjust between principal and income. Frankly, at the federal level, there's a capacity for a fiduciary to adjust between principal and income just based on discretion. So what you want to do in your trust is to make that rigorous. You want rules. So, because anytime you could get rid of discretion, you make your position stronger. Don't want the discretion. I'm going to say it's principal. You want, under this condition, it is principal. Under this condition, it is income. And by doing so, you alleviate the scrutiny, the capacity to scrutinize your discretionary decision-making process. You understand? So define your rules, and that alleviates risk. Thoughts about asymmetry USDA. Hey, how are you? Announcement, big deal. That's cool. Reminds me of MUSD, if you remember that thing. It's a diversified stablecoin of sorts. Yeah, it's lovely. Lovely product. Um, that is a period after that sentence. It is a lovely product. What does that mean? It could mean many things. Asymmetry is done well from a chart price perspective. So that's cool. You know where stablecoins go? They go to foreign exchange. They get traded. So more stable coins, more volume, more transaction fees. So this is the endogenous stable coins that I'm talking about or have talked about. What I want to see is $144 billion worth of USDC and USDT. When's the first $100 billion worth of stablecoins that come out of crypto? USDC and USDT don't come from crypto; they come from outside of crypto. So we want to see $100 billion worth of shit coming from inside of crypto. USDA, CRVUSD, money, bold, MIM, the products of Aladdin DAO, and FXN. I'm done. I'm done buying anything. I appreciate that. Appreciate the answer. Always, always a pleasure, my friend. Always a pleasure. When I read case law, I see the discretion can be challenged. Yeah, yeah. So get rid of the discretion. In your documentation, define rigorous rules because under almost all states, it's about strict prudent judgment and reasonableness. So if you're not taking a discretionary capacity, you oh, it wasn't sir, it wasn't discretion. I'm following section 13.5 through 13.7, and I'm following up with an evaluation against section 18. Here's the document. These are the rules. This is what was done. There's no discretion involved in complying with explicitly defined rules. So get rid of discretion, and that will alleviate when you I could tell because I've done my research, as you can imagine. Um, there is a fear and anxiety that's associated with can be challenged, and yes, of course, it can be challenged. So what I realized was, all right, so let's get rid of discretion. I have rigorous rules. Do this under this condition, under this condition. So obviously, it's favorable to for property receipts to get allocated to principal because it doesn't generate a taxable income. In you know, unrestrained, that seems like that could be challenged. Like, all right, if you make $150 bajillion, it's just principal. It's going to principal. There's no tax. Yeah. So what I did was I created limitations. I could only do that up until a certain amount of capital. How much capital? A reasonable amount of capital. And once that threshold is reached, then I could capitalize children's education accounts. I could capitalize, I could quarantine capital in a couple of different things that I configured. But generally speaking, once a certain threshold is reached, I am obligated by documentation to take property receipts that are mandated by the state of Florida to be allocated to principal and adjust it to income. Now, all of a sudden, an inspector be like, not only is discretion alleviated, but also there's very reasonable limitations. Reasonableness. That is a legal terminology, believe it or not. Reasonableness is literally a legal terminology. So be reasonable, and that will give you great power. By limiting yourself, you are being reasonable. Ladies and gentlemen of the crypto space, Friday, February 7th at 1:10 p.m. Thank you all for joining me today. I appreciate each and every one of you sticking through tough times to make good decisions and allowing me to share my thoughts with you. And half of who I am is because of the questions you've asked over the years. So it's a nice journey to be on. Don't stop asking questions. It's the only way we grow as humans. 258 people made it to the end of the stream, and you are all a little bit more rational because of it. I wish you all a wonderful day, a wonderful weekend, and I will see you on the flip side next week. Until then, peace.